Okay, hello everyone. This is Ahmed Shawi. In less than 2 minutes, actually, we have NFP, and it's when people are gonna be losing their accounts. Just take a look on DXY. You can see our price has rallied up to this fair value gap, to the hourly chart. You can see our price took out this buy side liquidity. So now I'm looking at this sell side liquidity. For ES, price just kept pressing lower into this fair value gap. So we might see a retracement. All right, let's see. Price took the buy side liquidity one more time. As you can see, it's digging deeper into the fair value gap, the higher time frame fair value gap. ES is trading lower. Let's take a look on Euro USD. Yeah, this fair value gap. Price is likely to reach to it. Regarding Pound USD, we have the sell side liquidity here. Price is likely to reach and take it out. It's close to it. I haven't traded this week. I took just one trade on Tuesday. I took some shorts in the New York PM session. I might review it actually. But other than that, I didn't trade on Monday because it was a holiday, the 1st of January. Wednesday, there was a move in London, but I missed it. And the rest of Wednesday is a no trade for me due to the NFP protocol that I follow. Thursday is the same thing. And now we have Friday. Now it's permissible and you can trade the New York AM session and the New York PM session, but not the London session. And you can see, in a matter of fact, the move. It was pushing to the upside. What is this? This down close candle, bearish breaker. If price retraces to it at New York a.m. opening at 9:30. I'll be expecting price to treat it as a bearish breaker. Yeah, I'm having coffee. I know that I came late today to the live stream, but I had to take care of some of my surgery lecture, and I just rushed back home to live stream. But regardless, we're here. Actually, I want to review last week on Tuesday's trade. I think it's this move down to profits. Can see price sold off in the morning, London, and even on when it opened, there was no move because, and I sat out during New York AM session because I knew that we moved a great magnitude of price in the London session. So by the opening, I knew that we will be in some kind of consolidation because every time after expansion, we'll be expecting some measure of consolidation, and we've got that. After the consolidation, there was a bit of a retracement to take out the buy stops that were residing above this buy side liquidity, reaching to a fair value gap. You can see fair value gap, mohawks here, and then it broke lower. Now, there was also another buy stops that were residing above this, and it took them during New York lunch. So it built the, let's say, the sentiment that we're looking for higher prices by it breaking above this high and filling that fair value gap. When it broke the low, this becomes a bearish breaker. Where is the high, low, higher high? At this point, people who are setting their buy stops above this high to catch long, and people who shorted who longed this, they will have their stop loss below this low. Price traded lower, took out the sell side liquidity, then retraced. At this point, when price is walking inside the bearish breaker, it's giving a chance for the people who try to long to get out of their position. So to walk inside the bearish breaker, and you can see the volume imbalance here. Later it broke lower, took out the New York AM session sell side liquidity, this low, and that was it. A bit of a retracement, a reversal here in the last hour of trading. And then it was a consolidation. I took this trade right there. I shorted, aimed at this low, made like about 3%. You can see roughly 3%. Yeah, 3%. So yeah, that was the trade that I took on Tuesday. Monday, as I've mentioned, it was a holiday, and you can see there was no trading. We opened the end of the day, and usually Tuesday would not be a trading day because it's a day after a holiday. But New York PM session was clean for me, The New York AM session, I sat out. I knew that it's going to be seek and destroy. So it's going to be choppy price action due to the London's move. New York PM, we got a clean move, attacking New York AM session to sell liquidity. Keep it clean and simple to sustain your longevity in this industry. Anyway, Thursday, no trading for me, NFP protocol. And now Friday, you can see that there was a bit of a move here on downtrend on ES in the morning, London session. But regardless, you would not be trading it following your protocol. You can see price took the buy side liquidity here, broke lower, bearish breaker, price retraced, followed the bearish breaker to the tick, and then traded lower. I'll show you something interesting. Hold on. What do you see here on the 5-minute time frame chart? Price taking out the buy side liquidity and then breaking lower. After it broke lower here, retraced, walked inside this fair value gap, this fair value gap, this bearish order block. I want you to pay very close attention to this high right there. If we drop down to the 1-minute time frame, this high, you can see that price from the high, low, higher high, lower low. And then price retraced to this fair value gap and the bearish breaker. So this is a bearish breaker and a fair value gap right there. Price retraced, walk inside it. This would be your permanent entry, and then it broke lower. This is a very tight entry. Broke out, took this side liquidity, and continued breaking down lower. So this was the move in the morning. Now for the New York AM session, as I mentioned, if it retraced, now it has formed as a fair value gap, and we have a bearish breaker where it took the buy side liquidity and then broke lower. Now for NQ, it has retraced to the bearish breaker. You can see, touched it right there. We'll see how it reacts to the bearish breaker. I would love to see price from here to see some reaction. Retracement to the bearish breaker. But after all of this selling that happened, I'm not really expecting another sell-off. We formed a bearish breaker here, On the weekly, we're just retracing to a fair value gap, by the way. And here on the weekly time frame chart on the XY, we retrace to the fair value gap and to the bearish order block. So any closing above this level, which is the bearish order block mean threshold, any close above this level will signal to me that we have a shift in the market structure, a break of market structure, if you would call, and be expecting higher prices, fill this fair value gap, took out this buy side liquidity, and take out this buy side liquidity. I'm mainly bearish on the XY. I want to see lower prices attacking this sell side liquidity. Alright, so I had to take that call. Anyway, you can see price has retraced to the bearish breaker. It's walking inside the bearish breaker. I don't want to see it close above the mean threshold of the bearish breaker. In a perfect world scenario, this is what I trade. I trade this model right there. But because of this case that we've been selling off the whole day, Thursday, since Thursday noon, we've been selling. So I think this is just a sucker play to suck in as much people as possible. We have another live stream this month on the 11th of January 2024. We have the CPI, and on the 31st of January 2024, we have FOMC. So we have two live streams scheduled this month, two more. And I know I wasn't really on time regarding NFP, but then the future live streams are gonna be better. Gonna be coming. I'm gonna be live streaming 15 minutes ahead, 10 to 15 minutes before the actual announcements of the NFP new driver. And this applies also to CPI and FOMC. We're gonna go over DXY, ES, NQ, um, also the Forex market, USD, Pound USD, and just studying how price takes out the buy side and the sell side liquidity. So price is now closing in the bearish breaker. I have no skin in the race. Why? Because I'm waiting for 9:30 New York AM opening bell. That's going to decide what I'm gonna be doing. Because as I mentioned, like it's likely that this is just a sucker bearish breaker to trap in as much shorts as possible that are going to buy or that are going to sell for smart money. So if you think about it, smart money have positioned themselves below the slope. So in this area, they have been positioned. It's a wick. So they are positioned in the wick and they are selling. So after we broke lower, many of the retail are gonna be looking at this and they're gonna look at this as a bearish breaker. You know, price has a high, low, higher, high, lower, low. Even this, they would think about it as a bearish breaker. They'll be selling, but they're gonna be selling to who? Who's gonna buy their shorts? Who's gonna buy their shorts? You know, they're selling. So who's gonna buy the item that they're trying to sell? What they're trying to sell? They're trying to sell this market asset or this asset class. They're trying to sell it. Retail are going to look at this as a pattern to sell. They're gonna sell the positions for smart money. Smart money are gonna buy it from them at a very cheap price. After price break above this high, after price breaks above this high, buy side liquidity swept, we're gonna have a bullish breaker. So we have a low, high, lower low with the NFP. So NFP took out the sell side liquidity. It manipulated the market selling short, and as a result, selling short, it has built a lot of interest in shorting because they think that it is time to short because NFP was trading lower, and it's not the case. So it built the interest and the sentiment into lower prices. But as you can see, we've been selling short since yesterday. So we're in a deep discount at the moment. Price has also closed above this fair value gap, which makes it a balanced price range or a fair value gap, an inversion fair value gap. So a fair value gap, but this is actually an inversion fair value gap. Inversion fair value gap. Is my voice being recorded? Yeah, it is. All right. So fair value gap. This is an inversion fair value gap, and we have the bearish breaker. Also, the bearish breaker can be treated as an inversion BD array, but mainly I'm looking at this fair value gap because now it's to be considered as a balanced price range. So when price is tracing to it, you'd be expecting some kind of measuring a breakaway gap to form from what is the mean threshold. What's the consequent encroachment? It is roughly this level. Yeah, I'm expecting this area to not be traded to. This is small. Let me annotate it in another color. Black area, black rectangle to be treated as a breakaway gap. So price never trades to it, at least this area. It can trade to the mean threshold with the wicks, but I don't want to see any wicks inside this black rectangle. And sends price higher to the buy side liquidity. So smart money have bought these lows, this area below this lows, the sell stop, they have bought the sell stops. They're buying again here when price is retracing, and when price break up higher, it's gonna be buying also. It's gonna be taking some positions off because they are mainly hedging. They're hedging their positions. So after price breaks above this high, they're gonna take some profits and they're gonna add more longs once price retraces to it as a bullish breaker, which is likely gonna send us higher where? Let's look at the high time frame. I have this buy side liquidity right there, relative equal highs with the fair value gap high. We have this area, price can is likely to reach to it. This is what I'm expecting from my own point of view. Expecting higher prices. Let's check on gold. So as I've mentioned, we have two future live streams on the 11th and on the 31st of January 2024. I already reviewed Tuesday's trade, Tuesday's New York PM session trade. I'm gonna be looking into New York AM session. which is in about 30 minutes. And I'm gonna be waiting for the opening range to form, which is the opening range is from 9:30 to 10 a.m. I'm gonna be looking at it and I'm gonna see how the sentiment is being built, and I'll be looking for some trades at 10 a.m. or otherwise I'm gonna be trading the New York PM session, which is after New York lunch. You can see our price has retraced. I'm not pressing any button here in front of you. As I've mentioned earlier in the last weekly review of 2023, this is just primarily to study liquidity and how price moves from buy side liquidity to sell side liquidity, and from sell side liquidity to buy side liquidity. And the same thing is mentioned from discount to premium and from premium to discount. We're just studying price action in the live streams. I may upload in the future, I may upload some snippets, videos of me executing. But my main purpose here is to teach you how to be careful, because in times of human interventions such as NFP, which we had just about 30 minutes ago, CPI and FOMC, you really can hurt yourself, and you must have rules that can guard you from yourself, or otherwise it will be very hard for you to actually succeed in this industry. So price is just being walking around this area. See an immediate rebalance here, roughly. The moment price just peak above this high, it doesn't need to close above it, just trade above it. This will validate this as a bullish breaker. I'm not giving you signals. I'm just sharing my own inner dialogue of what I think of price. Okay, so it broke above it. Now this becomes a bullish breaker. You gotta select all the candles. You don't need to close above it. Once it retraces and give you the chance to be long here, you don't need to see it close above it. Like right there, you can be long. At this point here, you can be long, and the price hasn't even closed above it. I'm not pushing any button, although I've mentioned that you could be long here, looking at these areas to be reached. So this is my target, this is what I'm looking for. Potential fair value gap here is forming. Now this is the unicorn. If price forms a fair value gap, later if price retraces, work inside the fair value gap and the bullish breaker, this is the unicorn model entry. Click on DXY, you can see price is now breaking lower after it has filled and filled this fair value gap, which is a higher time frame fair value gap. Let me show you on daily time frame. The weekly fair value gap has filled the weekly fair value gap, as you can see, reached to the bearish order block and now retracing lower. As you can see, I mentioned on the hourly chart that we have this sell side liquidity because we had this buy side liquidity, we swept it, and we swept the buy side liquidity, this buy side liquidity one more time on NFP. So retail must be excited to look for high prices, but we retraced and now we're likely to reach to this sell side liquidity. You can see we broke lower. As I've mentioned, we're looking for higher prices. After I've explained the context of why price broke lower on NFP and how I told you that it's gonna likely to reverse and take out the supply side liquidity and validate this as a bullish breaker block. As I mentioned, potential fair value gap here. This is also a bullish breaker block. You don't need to see price, as I've mentioned when it broke above it, you don't need to see price retrace to it. The moment it retraces and gives you an entry inside of it, you can take that long. Although, as I've mentioned earlier, this is not a signal for you to go long, but this is what I'm thinking. I'm looking for high prices. So now price is working inside. You can see fair value gap to retrace to the bullish breakup and is working inside the fair value gap. You can set a stop order above this. Buy stop order because this is gonna be a future bullish order block. So after price breaks above it, just below the mean threshold of the bullish breaking. So price is now accumulating orders at the fair value gap, accumulating orders at the bullish breaker, and what I'm expecting is at the 9:30 New York opening, the opening bell at 9:30 New York AM time, New York time, 9:30 AM New York time, I'll be expecting some kind of expansion to the upside. Now, if it formed another down close candle here, I'm gonna switch my buy stop order. I'm gonna move it to the open of the lowest down close candle. Nasdaq has opened inside the fair value gap, looking for this buy side liquidity. So this is where I'm expecting price to draw to, alongside this high, these highs, this fair value gap. This is what I'm looking at for NQ. It's just accumulating orders. Later it's gonna attack this buy side liquidity, reach to this fair value gap, this buy side liquidity and this buy side liquidity. I don't need to see it reach all the way to this buy side liquidity. Fun fact. For some reason, it's rejecting my orders. Regardless, I have There's some glitch in my broker for some reason, but I'm not gonna be trading this because oh, let's switch to the demo. So you'll be buying at this point. If you had your stop order for longs, buy stop, this would be a bullish breaker, bullish order block, excuse me, and you don't want to see price retraces below the mean threshold of the bullish breaker. So as I've mentioned, for the same thing can be said for ES. We have this buy side liquidity that we're looking for, relative equal highs, as you can see. This buy side liquidity, we have a very gap here, relative equal highs, prices taking them as I've mentioned. So you'll be taking some profits there. So as I've mentioned, price retraces inside the fair value gap and the bullish breaker, took out the buy side liquidity. I'm looking for high prices. As I've mentioned, this buy side liquidity, we have relative equal highs, clean highs here. We have this high, this fair value gap. So at the 9:30, I'm expecting some movement to the upside. Although we can, yeah, I'm expecting some movement to the upside. On NQ, it has took the buy side liquidity, as you can see. Next is gonna be the fair value gap, have this buy side liquidity, and eventually this buy side liquidity. Price is working inside the bullish order block. So this is a bullish order block. There's no fair value gap. You select the highest body. If there's a fair value gap, you select the highest wick. As you can see, there is no fair value gap, so you select the highest body. Take one here. Next would be and this buy side liquidity. For your info, I'm demo trading it. I have no skin in the race. I'm not using real money. I'm not using real funds. I'm demo trading this for studying purposes. And you can see how price is moving just as I've mentioned. If you go down to the 1 minute, you can see the same thing. Price created a low, high, lower low, higher high. What is this? Low, high, lower low, higher high, fair value gap, bullish breaker, another retracement. So you have another entry here with your stop loss at this low. Should be to you'd enter here and you would leave at the next buy side liquidity target, which is we're likely to reach and attack it eventually. Bullish order block has a fair value gap. About 6 minutes, under 6 minutes until the New York AM session. I'm expecting just expansion to the upside, strong expansion to the upside. We also, for your info, we have this gap that you also need to look into it. This is a liquidity void where there's no trading at all. You can see that from this price level. This is new day opening gap. Yesterday to today, there was an absence of any wick or any candle. So, hello, Adwan. I hope you're enjoying the stream so far. Where are you based? Oh, currently I'm based in Cyprus to finish my studies. In less than 5 minutes, we're about to see an expansion to the upside. I know you don't care, but I'm preparing for my final exams next week. Well, I'm currently studying dentistry. Um, right now in my third year, 2 more years to go. The first 3 years are theoretical, where we're just studying about dentistry, about teeth, and the last 2 years are gonna be practical, where I'm gonna be working in the clinic. And which country do you go back to? I'm gonna go back to United Arab Emirates, Dubai, as this is where I mainly live. I was born and raised in Dubai. Thank you for tuning in, and if there's anything else, I would love to help. Anyway, so prices now attacking buy side liquidity, stretching higher, took the high of this buy side liquidity of this took the high in about 3 minutes, less than 3 minutes. We're gonna be seeing some movement, some speed in the markets. So you'll be taking some off at the buy side liquidity too. Let's check on Nasdaq. See it reached to the low of the fair value gap. Can see how the institution order flow entered the drill, retrace to the fair value gap, bullish breaker, then broke higher. Now it's working inside the fair value gap. I was trying to do trade the Nasdaq and ES at the same time, but it wouldn't let me. Yeah. So right now you'll be taking something off here of the price attack. This buy side liquidity. You'll be taking one more, less than 2 minutes until the 9:30 a.m. New York time. So it has reached to the buy side liquidity. One more jump above this high, and I'm gonna be booking one more lot right there. Thank you. Moving my stop loss below the mean threshold of this bullish order block, as if price trades below it, it would be a no use for me. The 85 even right there. So my terminus is the vertical equal highs, as I mentioned, this buy side liquidity, and I'm gonna be seeing how price react there. About 10 seconds. I would love to see some expansion to the upside. Let's see. Bit of a retracement here to the bullish order block. Reach to the wick of it and strong retracement to the upside. Honestly, I'm looking for higher prices. I'm thinking that price might likely to to attack previous day's high, which is probable this buy side liquidity, because we took the previous day's low right there. We kept walking here lower, and then we traded higher. Market started to shift right there. Retracement, favor gap, bullish breaker. Another walk to the upside. Nasdaq to the buy side liquidity. As you can see, we still have this buy side liquidity right there. ES is retracing, work inside the bullish order block, and this high as you can see, Nasdaq has took the buy side liquidity, and ES it hasn't yet. So this is like the sixth sister. ES is the sixth sister. As you can see now, it's running back up. I'm looking at this fair value gap. Be taking something off here. Once we reach to this fair value gap, be taking one more. Why? Because trade price is booking based on liquidity pools and inefficiencies in price action. So when it's trading higher, seeking imbalance or a favor gap, as you can see here, and it's seeking buy side liquidity, as the buy side liquidity that it's swept here, this buy side liquidity that it's swept here. This is what it's seeking right there. Give me one more. Thank you. Now my stop loss is at break even. I'm gonna be moving my I'm gonna take one more at this buy side liquidity. Right there. Thank you. So I have just one more, which is at the previous day's high, right there. So leaving a runner to the upside. NAS was, or NQ was stronger to the upside, as you can see. So I just outlined to you and show you, and I showed you how I'm trading. Everything is live. I didn't edit the video. This is live stream, and you're watching me executing. As you can see, as you can see, I entered here, took something off here, took I took here one lot at the supply side liquidity, another lot at the supply side liquidity, one more at the fair value gap, and the last one I took is at the supply side liquidity. And I'm holding one for the supply side liquidity, which is previous day's high, because we took previous day's low right there during London. So I'll be expecting price to run up the previous day's high. I believe that's gonna be pretty much it. I will update you on the position on Twitter of how it went, but I'm holding a runner to the previous day's high. Everything is mentioned here and shared with you live. I anticipated how price is gonna be forming a breakaway gap, and price did form a breakaway gap and traded higher. It left this area open, as I've mentioned, and as I was anticipating. It formed a breakaway gap as I was calling it out, traded up higher. I even drew this buy side liquidity sweep before price even attacking the buy side liquidity. It attacked the buy side liquidity, retraced, walked inside the favorite gap, accumulated orders, which is the favorite gap, and inside the bullish breaker, then run up higher, took something off here at the buy side liquidity, took more profits at this buy side liquidity, and eventually favorite gap, and eventually this buy side liquidity, leaving a runner for the previous day's high with a stop loss at break even. So I hope you found something insightful from this. Everything is shared and explained in front of you. I did not edit the video. I didn't. It's not hindsight. Everything is live. Everything is live. So you can rewind the video and watch and yeah, you can rewind the video and you can see why the context of why I went long and how I took the profits here. So I think that's gonna be pretty much it for this case study, liquidity case study live stream. Um, as I've mentioned earlier, I'm gonna be improving those live streams. I know that I came late today, but with time and in the future live streams, I'm gonna work on the quality. I'm gonna work on me coming early, and overall, is gonna be a better live stream. As I've mentioned earlier, no, this is the third time I think I'm mentioning it here, but we have two more live streams this month. We have the CPI live stream on the 11th of January 2024 and on the 31st of January 2024. Two more live streams, and they're gonna be better than this one by folds. So I hope you guys found something insightful out of this. Um, and as another tip, rewind the video and listen carefully to what I have mentioned. Listen carefully to what I've mentioned and to what I have explained about price, why price is likely to trade up higher. The moment we were trading here, we took the sell side liquidity. I've called out why I'm looking for higher prices, and this is gonna be treated as a sucker bearish breaker. Everything is documented and it's in the live stream. You can rewind and you can watch it. You get a lot of info and insights, context about why I took longs and I was favoring the buy side over the sell side. Until I talk to you next time, be safe. Assalamu alaikum wa rahmatullahi ta'ala wa barakatuh.